I know it, and you know it. There's no better time to invest in the stock market than now. Joking aside, welcome to Am I Rich? My name is Keith. I'm just starting this channel, so what is it about? It's about finance. I'm going to talk mostly about stocks I think are interesting. Basically, I'm not from the finance world, but I've been investing in stocks for the last couple of years or few years, and I thought, what better way to get opinions than to post the stocks I'm interested in potentially buying or looking at least, and seeing what people comment or what they think about it, or if they have any information that maybe I'm not looking into or whatever. So I thought, yeah, why not start a channel like this and post videos. I'll probably try and post videos, fairly regularly, but anyways, let's get right to it. So CIBC is the stock I want to talk about. Ticker symbol is CM. CIBC, for those of you who don't know, is a Canadian bank. It's one of the top 5 banks in Canada, and it's been a really big bank, and it's been among the top 5 for a very long time. The company's been around since the 1800s. It has been very stable. It has been a dividend aristocrat. It's been giving dividends since the 1800s, and usually it increases its dividends. So it's involved in commercial and financial lending and bank activities. It's a very similar structure to the other major banks in Canada. Now, why do I think this is an interesting stock? Well, for one, many stocks have dropped recently, and so the stock prices are cheap for many stocks. But in this case, because it's a bank and it's so safe, a Canadian bank, these Canadian banks, they're generally stress tested every so often to make sure they can withstand any major economic pressures, like a huge downturn like the Great Recession or some kind of industry-wide slowdown, and they always have to restructure their portfolios to make sure they can withstand these potential issues, making the Canadian banks among some of the more robust banks you could invest in. Other than that, the price is super cheap, I think, right now. It's around 110, which gives it a PE ratio of about 9.5 or a price to book ratio of about 1.4. Now, I don't know about you, but holy mozzarella, this, I don't know, it's like Swiss. It's like printing gold practically. It's so cheap for a bank of this caliber that it's hard to imagine it wouldn't go up back to a more reasonable level. So this is one reason why I first started looking at CIBC, because I thought, hey, it seems to be fairly cheap I think it's the cheapest probably, depending on how you evaluate, but it's one of the cheapest banks, major banks in Canada. So a little bit more about what they do is they mostly do banking in Canada, but they also have a little bit internationally as well, and they've invested a little bit into the Caribbean. So as far as risks go, their biggest risk might be things like the Caribbean or these different areas that they're investing in that could have some turmoil. I think the Bahamas actually had some restructuring of their payments to CIBC for loans that they had there. So that's kind of a risk there, but generally, again, like I said, they're stress tested, so it's a pretty safe stock overall for that. Another thing that's really nice about it is the dividend. Dividends right now about 4.9%. So with that kind of dividend and a good chance that it could go up, seems like even if it went down, I mean, you're getting a guaranteed 5%, which is better than most, like a savings account or some kind of a bond or something like that, typically, or some kind of other guaranteed investment. And this company, the bank's been growing at about 9% for the last 5 years. Um, it's a very steady growth bank. Like most of the Canadian banks, they seem to have just a very steady path of growth, very stable. If the whole economy tanks, they might have some struggles, but again, like any other stock that you put your money in, also would have that issue. So, it's very likely. So those are some reasons. Another reason I'm kind of interested in this stock is that CIBC, like many other banks, is exceptionally, in my opinion, cheap. So if you look at the different valuation metrics like P or price to book, this stock it's basically the cheapest it's been in like 20 years or maybe more. So and many banks are like this, and this might be why Warren Buffett is investing in banks, because you think like, well, why would you put a whole bunch of more money in banks? Like, what are banks? They don't grow like tech companies. But if the whole market of banks is down, and then you pick like one of the cheaper banks but still very stable banks, I think there's a huge potential for upside. And honestly, I think like most likely this stock should be at 125 by the end of the year, maybe more. I mean, I think it could. I don't see why it couldn't be at the 160 or 170 dollar level, but right now it's at 110. So I see a huge upside. It's very cheap relative to what you're, for the assets you're paying for if you're to buy the stock. So I really like this company, and I thought, hey, I just wanted to see what you guys' opinion was on it. Do you guys see CIBC going up? You guys think it's there's some other looming threat out there, like e-banking or something like that, or some kind of low-cost banking? I don't know. Like CIBC also has a sector that's like Simply Financial, which is like a low-fee kind of banking. So, and people don't tend to switch over large assets or mortgages very quickly to new types of banking. So I don't know that it suffers a huge threat in the next 5 years at least. Anyway, so I'd like to know your opinion. Anyways, yeah, so if you think, thanks for watching. If you think this is interesting, or if you think this added anything, or if you have any comments, that would be great. So yeah, and like everybody usually says, see you in the next video.